Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. The markets have taken a turn southwards. We went to levels of 18,030. But in the last 20 minutes, you've seen some amount of profit booking coming through. So the high today is 18,030, and this is lower than the high that we had yesterday. The intraday high yesterday was 18,050, which coincided with the 20-day moving average. So just for the near term, on the upper side, the resistance will be seen at the 20-day moving average of 18,051. We didn't quite get there, but we were trading above 18,000, and now we are trading below that. But broadly, you can sense some amount of confusion in the market. So Friday, markets were firmly in the green. We rallied close to about 100 points. Then yesterday, markets ended lower by close to about 60 points. And today, markets opened higher and are still holding up in the green. So all in all, it's been one up day, one down day, another up day, but we're still very much in that range. For the last 3 weeks now, the Nifty has been holding on to that range of 18,250 on the upside to about 18,800, 18,770 on the way down. 3 weeks now that we broadly held on to this range, and it's been nearly 10 days of the earnings season, and we've still not managed to breach it. The FI selling yesterday came down significantly. So 750 crores was the FI selling yesterday. This is lower than the average over the last couple of days. The only question is, was it an account of the fact that US markets were shut yesterday, and therefore the global volumes, the FIs were on, sort of in a semi-holiday. So we will watch for the FI selling or the FI flows in today's trade. Today is largely a mid-cap earnings day. So you've got Metro Brands, Bank of India, ICICI Pru, ICICI Lombard, a couple of insurance companies. On the IT side, Mastech, Nugent will be reporting numbers, Delta, Eris Life, Tata Metallics. These are a couple of the other companies which will be reporting numbers. Amongst them, you can see Metro Brands holding up quite smartly ahead of numbers. That's up close to about 1.5%. And on the losing side, you can see some softness coming through on Delta Corp. That's down 1.7% ahead of its earnings. So a lot of focus on individual mid-caps today.
Oh, absolutely, and a lot of focus on sectors as well, right? Hi, Pavitra. Hi, Reema. In fact, I'm looking at a lot of the technology names because there's definitely buying that's come back in those names. And you can see it through the course of this month, right? I mean, the Nifty IT index itself is up about 2.5% this month. It's gaining some more ground this morning. Even if you look at the top Nifty gainers today, HCL Tech is the big mover. It's up 7% this month. TCS is up 2.5% this month. And that's the question we're asking. Is the leadership now shifting from banks to the tech names? Even in the broader markets, I mean, Cyient is up almost about 10-odd%. So just keep this piece on your radar. And we had a chance to interact with, Motilal Oswal, and they told us that they are definitely nibbling into the IT stocks, especially after the tech earnings, which was not as bad as expected. So TCS, Infosys, HCL Tech is what they're looking to buy. The other thing I'm looking at is HUL. Now, HUL comes out with its earnings on Thursday. And in the run-up to the earnings, there's definitely buying interest there. So, as per the CNBC-TV18 poll, it's expected to be a good quarter because rural demand is coming back. There's a 13% revenue growth, and the margins will also expand quarter on quarter. So these are a couple of pockets that are definitely seeing buying interest today. What are you tracking, Pavitra?
Oh, absolutely. So, like you were talking about HUL, the entire space pretty much is actually up today. So, the consumption pack is doing quite well. So, do keep that on your radar. A few of the other names will come up for you. Yesterday, we got very excited and we were talking about the bounce seen in PSU banks. But, those ones are a little bit subdued today. So, these are some of the names. These are the ones seeing the sharper cut. But the PSU bank index in itself is looking quite subdued. On what's doing well, you have the HDFC bank and HDFC stocks, which are, at least today, they're seeing a little bit of green. So, that is looking good. And once again, pharma continues to be under pressure. Some of the larger names will be up for you, but this space is definitely one where we have seen, some kind of selling pressure over the past many days. So this is something that we would keep on our radar as well. But that's what's happening on the market level. Let's talk about the individual names now. Sula Vineyards is the first stock on our radar. The stock saw a big up move yesterday, and then it's up once again today. This is after the strong Q3 business update. In fact, earlier today, we spoke with the management, Rajiv Samant, who's Managing Director and Chief Executive Officer of the company, to really understand their outlook going forward. So let's listen in to that very interesting chat.
So I think already we've seen significant growth, as you've pointed up, 70% gross margin. At this point, I must say that it's not necessarily a priority, the top priority for the company to improve it further, because at 70% gross margin, we're throwing out cash. We're in a very comfortable position. We now want to plow that cash back into growing the business, into penetrating wine into tier 2 cities. Until now, wine has been very much a metro game, a few tier 1 cities. We want to take this magical liquid, what we call it, out to tier 2 India, and we want to spend money in penetrating that market for growth to come 2 or 3 years down the head. I think I'm very comfortable with a 70% gross margin at this point. So, in the last couple of years, our premium category, I would say 700 rupees and above, and especially 1,000 rupees and above, has grown much faster than the more popular wines. Having said that, Q3 saw strong growth across categories. I should point out that our cheapest wine in Mumbai is as low as 260 rupees. Our most expensive own brand wine is just a shade under 2,000 rupees. We saw strong growth across that. But from a management point of view, we are very focused on wines above 700 rupees and especially above 1,000 rupees. We are by far and ahead the market leaders there.
Okay, Sula Vineyards doing very well. There's no stopping the wine drinkers in this country. But what's also doing well is the entire defense push that we have been seeing. Hindustan Aeronautics is the next company that we're tracking today. In fact, earlier today, we spoke with CB Ananth Krishnan, who's chairman and managing director of the company, to really get an update on the huge order pipeline that they have received from the Indian Army. So let's listen in to what the execution of that could look like.
As of now, the order book is standing at a healthy around 84,000 crores, and we expect another 6,000 crores from the STT-40, for which the order has already been concluded. Only the documentation part is pending. The inquiries have increased. The leads which are coming from the other countries have also increased. There are a lot of countries which are now showing interest on HAL product. As far as the Argentina is concerned, we are in discussions with them for the helicopters. We expect that orders should come through.
Okay, that's HAL. Very optimistic over there. They're looking at 36 to 38,000 crores of orders in the next 6 months. And they're seeing a lot of inquiries come in from Argentina, Philippines, the UAE, a lot of leads for their helicopters. So that's a positive view coming in there. Let's focus on another buzzing stock now. Tata Chemicals is rallying on the back of a bullish brokerage commentary. Sonal is here to give us the latest on that. Sonal.
Thanks a lot for that. Well, yes, Tata Chemicals is in focus. Morgan Stanley says that the stock has seen a 20% correction since October. So they are now looking at what next for the stock as well. They say that, yes, they expect market conditions to incrementally improve from fourth quarter, and company-specific triggers specifically are likely to pan out in the first half of calendar year 2023 itself. They are expecting stabilization in the soda ash market. But yes, there is a slow pickup in China demand, but it should see a reversal in the downside pressure that we are seeing on regional prices as well. So yes, they expect prices to remain steady and fundamentally things to work out for Tata Chemicals as well. There is upside to production volumes. There are higher average selling prices that they are looking for. Going forward, US domestic volumes will be the key to watch for Tata Chemicals. Right now, the stock is trading at 6 times forward EV to EBITDA, which is near a 5-year average, implying an average soda ash average selling price of around $240 per ton. This is around 13 to 15% still below the mid-cycle. So there is an expectation that things will reverse, production volumes will improve, and that is something which will work for Tata Chemicals from here on. They have an overweight rating on the stock with a target price of 1,278 rupees per share, which is a substantial upside from current levels.
Okay, thank you very much for that. Get into a break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in as always.
Welcome back, folks. Hope you're having a good morning of trade. The market surely is. The Sensex and the Nifty are holding up with gains of about 0.5%. And there's a lot of wine drinking, restaurants, aviation, all the good things in life that are doing well. Specialty restaurants is up 12.5% right now. So up all, both in terms of volume and price action on specialty restaurants. In fact, this month has been very good for that stock. It's up almost 25% for the month. But as world business and policy leaders gather in Davos amidst multiple headwinds for the global economy, top Indian CEOs are exuding confidence about the India story. Tata Steel's TV Narendran is bullish on India's prospects as an exporter of steel. Listen into their comments.
China opening has certainly helped commodity prices. So not just steel, if you look at copper prices, it's gone up about $400-500 in the last month. Steel prices have gone up in China. Domestic prices have gone up by about $100. So overall, we see a positive sentiment. Iron ore prices have gone up. Coal prices have gone up. Not all of it is good for the steel industry. But overall, the sentiment is changing in China, certainly. And that has a huge impact in the world, as you know. China is looking good. India is looking great. So I think in many ways, many parts of the world are picking up where it left off over the last few months. So we are quite positive over the next 6 months. And there's no reason why India shouldn't be a big exporter of steel. You know, India has the raw materials. And why should Japan, China, and Korea be exporting steel when they don't have the iron ore and we have the raw material, and we should be exporting steel, creating jobs? The second part is, yes, when I look at our customer segments, if you look at automotive, they are back to where they were 4 years back. If you look at construction, it's quite strong. Industrial buildings, a lot of investments going on in supply chains, warehousing, a lot of investments in oil and gas. So all that will trigger private sector investment. So I think we are probably 6 months to 1 year away from getting private sector investment back.
Okay, as promised, Manisha is also with us now, and she's going to tell us about cryptos and why she's tracking that space today. Manisha.
Well, thank you for that. We have seen commodities gain up, and so has been the case with crypto as well. Just as you thought it could be written off, and there is just so much moving around that, and there are regulations that could go against it as well. There is some buying that has come back into the space as well. So when you look at the crypto overall market capital, after hitting a low at around $860 billion, we are back about $1 trillion in the international markets for this. Bitcoin as well has soared past $21,000. The low this one made in the previous year was below 16,000 as well. So good going there. This is the first time that 21,000 is back since the month of November there. When the usual factors, the macros is what really seems to be supporting here as well. We've seen the U.S. inflation go down. The dollar index is trading on the lower side. And then the U.S. debt ceiling debate is something that needs to be finalized ahead of 19th of January, something that has led to some premium buying in case of cryptocurrencies there. And at the Davos, there has been big, long discussions about crypto adoption in Austria. That seems to be have led to some money coming back into this market. That chart should come in on your screen on what we've done in this year until now in sense of cryptocurrencies. So Bitcoin is already up by 27%. In the last 1 year, we still are 50% in the negative side there. But for the year 2023, there is buying that's definitely come back here. Ether is up 31% in this year. Dogecoin up 19%. Shiba Inu up 29% as well. And that has been the case across. So whether you talk about Avalanche, Polygon Matic, Solana, Cardano, all of these cryptocurrencies are up anywhere between 20 to 45% on the higher side. On an year-on-year basis, in the last 12 months, we still are taking the negative though.
In fact, there are reports indicating that Morgan Stanley, BlackRock, MicroStrategy, all these large companies in the financial services sector have been accumulating Bitcoin and increasing their holdings. And a lot of this happened in that long weekend itself. So if you look at the price move on Bitcoin, it's been pretty stark. It was 17,400 on the 12th of Jan, and it rose all the way to 21,270 on the 15th of Jan. So a large part of the price appreciation in Bitcoin came over the long weekend itself. Thanks, Manisha, for that. Let's slip into a short break. On the other side, we'll be joined by the management of RIL Corporation of India to discuss their recent order wins. Stay tuned.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. The market for now is looking quite steady with around an 85-point cut that we are seeing on the index. The Nifty bank, however, is absolutely flat right now. No big move coming through there. It's just managing to stay in the green, and the mid-cap index is where we're seeing some pain right now. So that's what's going on with the market. But let's focus on the PSU space now. RailTel Corporation has, recently won a whole bunch of orders. Around 480 crores worth of orders have come through in the past 1 month itself. So to discuss, we're joined by Chairman and Managing Director of the company, Mr. Sanjay Kumar. Mr. Kumar, good morning, and thank you very much for joining us today. This is Pavitra. So, like I was mentioning, in the past 1 month, we've seen a lot of orders come through. Can you take us through what the overall, order inflow has looked like for Q3? If you can help us with that number.
Yeah, so if we talk about order book, we right now have is around 4,700 plus crore order book, and this last actually not exactly this month, but December also put together, means December and some in January. So we have received close to 500 crore orders, and adding on to basically after doing delivery for few orders in the last quarter, right now my order book is 4,700 plus, slightly plus crores.
Okay, 4,700 crores. Got that, Mr. Kumar. Good morning. Can you tell us, is there any pickup in the deal pipeline? How many tenders are there currently which have been floated, for which the results are perhaps not out yet?
See, there are many tenders where we have participated, like one is in UP Police, there is Indian Oil Corporation in southern region, there are couple of tenders due in eastern parts also. So we are expecting a good number coming as far as new business orders are concerned.
Is there a discernible pickup in the number of order wins for you? What was the quarterly average of deal wins for you, Mr. Kumar, say 2 quarters back? And now you're averaging close to about 500 crores of orders in a span of 2 months. So could you give us some like-to-like comparison of order wins for you? Now, the current run rate versus the previous run rate.
Previous run rate was slightly lower because of, see, these tenders finalization are not in our control. Mostly they are decided by the purchasers. And we have been participating in tenders. We had good expectations, and maybe Q1, Q2, we did not have good numbers. But now, as you see that we have 500, close to 500 crore orders. So this is basically not in our hands, and we are continuously participating in tenders, and we have a very good reputation among the purchasers, government purchaser, as well as state government departments. Not only purchaser side, even supply side, OEMs, we see a good amount of momentum. They are now approaching us. They want to come and join hands with us.
All right, got that. But, Mr. Kumar, what will all of these, you were talking about the recent orders that came through and how there has been a pickup in the past 2 months. Can you tell us what this will really translate into for financials? For the first half of the year, you clocked in revenues of around 21%. What can we expect for the second half or for the full year also, if you can take us through that?
So these orders which we have picked up now might not translate into the revenue this year at least. But we are sure that 23-24, they are the numbers which we will convert into our revenue.
Okay, so when will they start contributing to the revenue?
We already have a handsome order book from previous years, and we are converting those business orders into revenue. So we expect that we will be able to get somewhere close to 20% growth guidance for this financial year.
Okay, 20% growth guidance for this financial year. What about FY24?
Sorry?
How about FY24? What would the guidance be?
FY24 will continue to at least maintain 20% growth guidance.
Okay, maintain 20% growth guidance both for FY23 and 24. Just wanted to check with you. Sure. Just wanted to check with you as we head into the budget. Are there any expectations at all on the, from the government on the railway side?
see, as far as RailTel as a service provider, as a system integrator is concerned, digitalization is something which is already there, and there are number of opportunities, not for RailTel, not only for RailTel, for even others also. And RailTel is now emerging as a reliable system integrator, reliable service provider in this segment, in this sector. One more opportunity which I see is cyber security, and we are now strong, making our foot present in this segment also. Cyber security will be, though it is a challenge, but it will be an opportunity, and we will try to get hold of this opportunity also.
Do you get any revenues from cybersecurity currently? What is the opportunity?
Yeah, we have one security operations center already, and we have few customers whom we are providing security, cyber security solutions and services.
So what could be the contribution from cyber security going ahead, sir?
It's really very difficult to gauge this number, but yes, this number is going to be huge, and of course, I don't have exact idea of the pie, but even if we get 1% of it, that will be a good number.
Okay, that is on the opportunity from cybersecurity. Mr. Kumar, there were reports recently that RailTel has tied up with a technology firm, that is 3i Infotech, in order to monetize the Wi-Fi project at around 6,100 railway stations. Can you tell us about that?
Yeah, so this, we already have Wi-Fi at 6,000 plus stations. Now, till now, we were not having any monetization. Maybe 2019 till 2019-20, we were partnering with Google, but since then we were not having anybody. So, and we were only getting some money out of it through paid Wi-Fi option.
Okay.
So after joining with after finding this partner, 3i Infotech, we are very much hopeful that they will not only give us minimum guarantee of 14 CR, but will be doing much better.
Okay.
Right now, there are about 14 lakh unique users who are logging into our Wi-Fi ecosystem on daily basis.
Okay, all right. So we leave it at that. Thanks a lot for joining us, Mr. Kumar, and giving us a quick update on the business. Have a great 2023. Okay, that's the word coming in from RailTel. As we take a break, here's an important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the entire list. We'll take a break and come back.
Welcome back. For the Nifty, we are just shy of that 18,000 mark. We're holding up with a gain of 100 points. But as you can see, there's been a slight bit of a grind down in the last 1 hour. One of the big movers today is Spencer's Retail. The stock is up close to about 9% in trade after the company announced its foray into the hypermarket format. So the company will be opening a new format chain called Spencer's Value Market that targets the value-conscious consumers. The company has said that they will be opening new stores in 6 South Indian cities this month. The stock clearly is very excited on the back of this development of the company and opening a new format of chain that targets the value-conscious consumers, Spencer's Value Mart. And considering the high inflation, I guess this is also what buyers want. So that is a big mover. Apart from that, keep your eye on ONGC. ONGC is now slipped to the low point of the day. In the morning, there was positive news about the windfall, the gain tax being lowered. So that should have been positive for ONGC. Plus, crude prices have now almost approached $85 per barrel. ONGC started off trade in the green, but since then it has slipped from the top of the day and is currently under pressure. HDFC Bank, after yesterday's cut of 1%, has recovered. Remember, the earnings were not bad, particularly on the loan growth front, but the stock yesterday was down close to about 1.5%. But today you are seeing buying coming through on HDFC after that post-earnings reaction has taken place, and whatever buying and selling and an adjustment people wanted to do. So HDFC Bank is looking quite good. Another one that we're tracking today is Reliance, and this is on the back of a Jefferies note. Sonia, what are they saying?
So they have an aggressive target price. 3,100 is the target price that Jefferies has on Reliance. And remember, Reliance comes out with its earnings on Friday. So very interesting. Ahead of the earnings, this note is out. Now, they say that the government has approved the green hydrogen mission, and they will be developing 5 MMT capacity and 125 gigawatts associated capacity. This happens by 2030. So the government is going big in terms of green hydrogen. Now, phase 1 will focus on existing hydrogen users and electrolyzer capacity creation, and phase 2 will focus on new customer industries. So there is a huge incentive initially to the tune of almost $2.4 billion, and that's only a beginning and is dwarfed by the subsidies that are announced by both the US and the European Union. Now, Jefferies talks about how any meaningful capital subsidy to Reliance will aid their valuation game. So they're looking at an $8 billion valuation of the green hydrogen foray that Reliance has, and any meaningful subsidy that they get from the government's end will aid that valuation uptick, and hence they're going with a big target price because of the green hydrogen boost. 3,100 rupees is the target price on the stock. In fact, Mitesh Thakkar of Earning Waves is joining in now to give us his view on the market. So let's get a quick technical check as well. Mitesh, on the overall earnings, numbers are out on Friday. It's going to be a good set of numbers. There's a sequential improvement expected in their refining margins, and the domestic gas prices have gone up. So technically, do you see further upsides in the Reliance chart?
Reliance, in fact, for the last few months has been doing a very broad range. On the upside, I think, we have seen clearly on multiple occasions the stock has failed to get past and sustain about 2780, 2800, while on the downside, 2400 is a good level to look at. My understanding is that the stock price, I think, is consolidating. It's in a long-term uptrend. So in the medium term, as the stock approaches lower end of the consolidation, around 2400, 2375 is the range to buy into the stock. And once it starts getting past 2800 levels, then I think the stock will really have a next significant leg of upmove.
All right, Mitesh, thanks a lot for taking us through that call on Reliance. But any other individual trades that you would recommend right now as well?
I think Asian Paints is on my radar. I think that's the stock, which is trying to reverse from lower levels. The breakout happens about 29.50 and the high today is about 29.45. So buy about 29.50, then take a stop at about 29.25, and 3,000, 3,020 should be the target area for the stock. On the other side, IRCTC is on the verge of breaking down, recording a negative breakdown that happens below 632. So below that, sell the stop at 642 for targets of 610.
All right, Mitesh, thanks a lot for that, taking us through that quick technical check on the market. But with that, let's move on to our special segment, Quarter Se Quarter Tak. The insurance earnings kickstart today. In fact, a lot of the insurance stocks are looking a little bit subdued ahead of that. So ICICI Pru is a little bit down in trade. You have HDFC, Life, which is seeing some cuts. But Surbhi is here, and she's standing by to take us through all of the expectations from the insurance sector this quarter. Surbhi.
The insurance sector is set to see a rebound in Q3 FY23. This is visible in their retail APE numbers. In Q3, the industry retail APE has seen a growth of 12%, largely led by private insurance players, who have seen a growth of 16%, while LIC grew 6%. The total APE has also seen a healthy growth. HDFC Life is back on the growth path with 23% growth on a year-on-year basis. ICICI Pru has posted a growth of 6%. Better than most analyst estimates, but ICICI Bank has been going slow on their insurance, and that's visible in their numbers. Max Financial is the only company with negative growth, but the management has guided for a better Q4. Our poll suggests that the value of new business, VNB, will grow anywhere between 12 to 39% on the back of APE growth, and also on account of increasing non-par savings in the product mix. Apart from this, the retail protection segment, the one with the highest margin, should also see a comeback in the second half, post a slow first half. On the VNB margin front, life insurance players are expected to see stable to improving margins. The incremental margins will be anywhere between 50 to 400 basis points. HDFC Life's VNB margin is expected to be flattish on account of unfavorable hit from the lower margin business of Exide Life. The other players will see an expansion of 350 to 380 basis points, reflecting higher protection business. The outlook for insurance sector remains robust, and with the underperformance of the sector in calendar year 2022, the current valuations look attractive. Based on FY24 price by embedded value, SBI Life and ICICI Pru appear the most attractive.
Okay, thanks a lot, Surabhi, for that. So that's the expectations this quarter. Before we head into a break, here's something that you, our viewers, must take note of. CNBC-TV18 and National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make all the right decisions with your money. Now, as a stock investor, I'm sure you've seen stock tips through SMSs, emails, YouTube videos, Telegram and other social media platforms. But did you know that wrongdoers use these channels to both pump and dump stocks? I would advise you not to act on it blindly. A smart investor always conducts adequate research, analyzes risks and consults only SEBI-authorized investment advisors to make an informed investment decision. You should go one step further and report any unsolicited stock tips to the exchange. Soch kar, samajh kar, invest kar. Welcome back to Trading Hour on CNBC-TV18. Well, Devang Mehta, Head Equity Advisory at Centrum Wealth Management, joins us now to talk about how to approach the markets. Devang, welcome to the show. I wanted your thoughts on this whole IT debate. Do you think the worst is over for the IT stocks? Because we've seen some good buying in the month of January.
Good morning, Sonia. Thanks for having me on the show. I think, yes, the answer is an emphatic yes, because what we saw in the past couple of quarters is that so much of negativity and pessimism regarding Indian IT exports. And yes, most of it came out from the fear of whether the Western side, the Western world goes into recession or it's a long-drawn slowdown. I think the answers to this are mostly sought in the this quarter's commentary and numbers, which seem to be encouraging, at least for out of the top four, the three companies were quite encouraging, right from Infosys to TCS to even HCL Tech. They didn't sort of disappoint, but also the commentary seemed to be quite on a strong footing. And the sense one gets it that we are out of that attrition fears, which was sort of at its peak a couple of quarters back, plus lateral hiring, which was another issue, which was the industry was sort of going through. My sense is that a bit of here and there in next 1 or 2 quarters, the sector looks very, very ripe in terms of the valuation correction that has happened. We have seen stocks valuation correct from 30, 35 to 18, 20, and even some below that. So my sense it's a good sector. Somebody has a horizon for 1.5, 2 years. Some of the large cap companies really look attractive in terms of not only valuation, but even business prospects.
Morning, Devang. Just going by the banking earnings that we've seen so far, right? It's pretty good. Federal Bank or even HDFC Bank, Bank of Maharashtra. But the earnings reaction has been fairly muted. HDFC Bank, in fact, slipped post numbers. Federal Bank did see some buying. Do you get a sense that the good news is already priced into the banking stocks after the run-up that we've seen, and banks may just consolidate for the next couple of months?
Prima, I think the logic that one derives from this, when we see earnings of good companies or earnings of banks rather, and that not reacting it to numbers very positively, is that I think the leadership was taken by banking sector a little earlier than IT sector. If I compare both, probably IT was a little more undervalued. Having said that, banks don't look to be sort of overvalued at all. It has come out of a long period of hibernation, 2.5 years of underperformance for a lot of this large cap banks like HDFC per se. The sense one gets is that we are getting into an operating environment which is very robust for banks. We know the credit growth numbers around 17-18%, which was visible in 2004 to 8. We are seeing NIMs probably expanding for a lot of these banks. We are seeing deposit growth to be sort of again expanding, and a lot of capex as well as consumption, discretionary consumption, which will lead to all these banks showing good credit growth, SME, MSME demand also being strong. So my sense is that somebody who probably has missed the boat in terms of buying good banking shares, particularly good private banks, some of the NBFCs have also gone through a larger round of correction. I think this sector looks to be brilliantly placed for the next 2-3 years, where India is going to grow a lot faster than the other countries or its other peers.
Okay, got it. Devang, good morning. Thanks for joining us. Normally in the budget, we do get an infra push, a defense push. Do you think at a time like this, you would look at, say the cement names or, the pure play infra companies? Defense, of course, there's been no dearth of action for several months now. But are these themes that you think are good to, look at right now ahead of the budget?
Pavitra, I think that's a very good question. I think a lot of market participants always go into the budget saying that it comes out to be normally a non-event. But this time around, because this is a pre-election year, we know that the 2024 budget by this government will be more a vote on account, and then we go into the election mode. So I think if you just go back in past cycles, we have seen government expenditure rising. We have seen government capex also sort of will be expanded in this year. We are also seeing evidence of greenfield and brownfield projects set up by corporates. The capex is on the rise for sure. So both this together would encourage a lot of investors to look into this budget very carefully. Yes, I think there will be a good amount of spends on discretionary consumption to rise as such. Some tax cuts here or there, probably being even a little populist as well as a little more conservative in terms of not expanding fiscal deficit. But sectors which would tend to benefit, my sense is that discretionary consumption is one sector which will benefit. Second is on the infra push that we always talk about. A lot of this capital good companies, ancillary, proxy power plays, all this would also be huge beneficiaries if there is an infra spend. And of course, building materials and cement also go hand in hand if there is a infra push as well as the housing push or real estate boom, which is sort of being expected. So I think a lot of sectors tend to benefit, but of course, as I said, it's a very speculative thing to go into the budget and say this will come and this will not come. But yes, one has a lot of expectations this time riding on the budget, plus the earnings season which is going on.
Okay. I wanted your thoughts on how to approach a stock like Reliance now, because, that stock has done nothing in the last 1 year. In fact, I think it's because, the lack of telecom tariff hikes as well as the weakness in global energy prices have pretty much kept a lid on the stock's gains for almost a year now. Do you see the tide turning anytime soon?
I think, Sonia, a very relevant question, because most of the companies, if you've seen, right from Reliance to Asian Paints to most of these companies, why I'm trying and naming some of those are because we just took out some analysis in that last 4 months. Nifty has actually done a move of 2%, which is led by a stock called Bank of Baroda, which is up by 48%. So it's been more a sector rotation rally in the last few months, if I can make that point. Sometimes metals, sometimes PSU banks, sometimes fertilizer companies. Most of these companies which are prime market leaders as such. So be it Reliance or be it certain banks or IT companies, they have not done anything spectacular. And I think there is a good probability that a company like Reliance, which benefits both from the older economy businesses as well as the newer economy businesses, right from Geo to retail, which has been doing fabulously well, plus the green hydrogen thing which we are discussing before the program. I think most of these businesses are slated to do very well. So I think if market has to sort of move up from here, which I expect in the next 1 quarter, if not in the next 2 quarters, I think there's a good probability that this market leaders or companies which are heavyweights like Reliance or banks or IT has to sort of lead the charge. So yes, Reliance at this point looks interesting and attractive.
You spoke about many corporates having announced their capex plans. Could you tell us where is it that on a consolidated basis, where is it that we've seen the thrust of the capex announcements? Specialty chemicals, for one, has seen a lot of capex announcements. But where else? Do you have some numbers on that?
So I think, yes, a very good question. So particularly RT Industries had done a capex of around, say, 6,000 crore, and that is the highest ever. The market cap of agrochemical, specialty chemical together, which was somewhere around, say, 1 lakh, 2 lakh crore just few years back, is now around 10 lakh crore. So most of these companies, though operating in different universe, have done a lot of capex. When you talk to capital goods companies, when you talk to a lot of infra companies, there is a lot of thrust which is happening not only on power transmission, on power leakages which are to be addressed, on on sort of energy efficiency of EVs. There's also a lot of spend going on creating the EV infrastructure. So all these companies, as I said, these are some of the companies that are listed, some are in the unlisted universe, but you see India INC probably spending a lot more. Of course, the numbers are not as visible because they'll be across different sectors. I named a few, but most of these companies are getting into sort of capex mode. That is where I think government capex plus private capex both together can create the type of credit growth which we are talking about.
Okay, Devang, that was quite an exhaustive conversation on a lot of sectors and the market as well. Appreciate it. Thanks for joining in. Let's slip into a short break. We'll get you more on the markets and buzzing stocks on the other side. Stay with us.